Welcome to Coffee and Crypto with Lee and Jimmie. I am Lee Reiners, joined as always by Jimmie Lance. Jimmie, you survived the first week of classes.
I have survived the first week of classes. We are doing our weekly seminar, first seminar of the year this morning with a fintech inventor, and students are ready to rock and roll. I mean, it has been a every year is different. It's people think that it's the same every year. It's absolutely not. Every year is different. Every class is a little bit different. And we were met with phenomenally good weather in North Carolina for the first week of classes. I mean, does it get any better than this? 70s and 80s? I mean,
no humidity, low humidity.
Low humidity. I mean, you and I should be going out and playing golf like every afternoon, except that.
Yeah, I have a health.
One of us is a little under the weather.
Yeah, exactly.
Yeah. But it's beautiful fall golf weather and no leaves on the ground yet.
No doubt. Congrats to Tommy Fleetwood, by the way.
Unbelievable.
First PGA Tour victory comes with a $10 million paycheck. Not bad, huh?
Not a bad way to start things off. I was, for those people who aren't golfers, everybody should check this guy out. One, he's a younger guy. He's been on the tour though for a while.
Not that young. He's in his 34.
30s. Yeah. He's in his, but he's been on the tour. Comes from Europe. And has a very different kind of style as far as the way he plays. And I love that choking up on the driver and stuff. But
he was like the classic forever bridesmaid, right?
Yeah. He's come in top 10, I think 10 times this year or something. It's crazy. But yeah, it started off his winning streak with a bang.
Yeah. So that's a little golf, a little inside golf for folks here.
Yeah.
Well, Jimmie, let's dive in. So not only are you busy with the start of a new semester and running a program and everything that entails, which is a lot, but you've been doing a little research and writing.
A little research and writing.
You do it all. So you recently posted a paper to SSRN, and my understanding is that it'll be published at some point by a journal, and the way those things works is it's like a very long timeline. So, which is one of the reasons why I don't do a lot of that, just because it's like
months.
It's months. Especially if you're writing about digital assets, months is years in our world.
Yeah.
Right. So anyway, you did the right thing and you posted the paper to SSRN. Obviously, we're going to post a link to the show notes. Co-authored with Reed Timsio. Am I saying his last name right?
Yep, that's the right name.
Co-authored with Reed Timsio. And the title is Genius at Work in the U.S. Financial System. So as listeners,
how'd you like that title?
I like it. I like it a lot. A little play on words, the Genius Act, right?
Yeah.
Look, you and Reed essentially kind of built out when we did our Circle IPO deep dive episode. You really built it out, and you attempted to answer the question that you and I have been batting around for, the past couple of months, which is, what is the future of this? How do these stablecoin wars end? Right? Yeah. What is the steady state? What does this look like 5 years?
So, what do you think about our? So, what do you think of our conclusion? I mean, this is
so it's like what is it like? Occam's razor here.
Occam's razor.
Occam's razor. Yeah, sorry, I screwed that one up. Look, somehow, some way. Guess what? The big banks, they always win, don't they?
The banks are going to win.
and that was your conclusion. Was that the big banks always win. And and obviously you make, and it's not a super long paper, folks. So it's only 11 pages. So it's almost kind of like a note, I think, in journal parlance, they call it like a note. Look, and it makes a lot of sense. I mean, essentially, and I don't want to, look, you explain it to me, but the way I interpreted it was, these are essentially commodities, right? There's nothing really differentiating one stablecoin from another, especially since they can't pay yield. The issuers can't pay yield,
right?
As we've talked about many times. But you do note, well, third parties can pay.
Yes, they can.
Or rewards or whatever. And so that gives the distribution platforms, as you call them, a lot of leverage, right? Like Coinbase, for instance, as we have detailed numerous times on this show, they have a commercial relationship with Circle.
Absolutely.
Where they get paid.
Binance.
As does Binance, yeah. And so Circle, gets paid a portion of USDC reserve income based upon how much USDC is custodied at Coinbase, right?
Right.
And it turns out that that is very profitable for Coinbase. They get quite a lot. So essentially, your argument is that it's all about distribution and who can get to distribution fastest, who can have customers, who has access to ready-made customers, who can cross-sell, right? Because you have to keep the users on your platform, right? I mean, the whole point of Circle is that they have to stay, they have to keep their USDC or Coinbase, they have to keep their USDC at Coinbase.
Right.
So how do you keep them there? You cross-sell. And so, and then, you also mentioned, well, reserve management, right?
Reserve management is huge.
Right? So this was not in your paper, but as we detailed in our episode on Circle's IPO, they have a relationship with BlackRock. So BlackRock is the exclusive manager of USDC's reserve. They have a money market mutual fund that they run just for Circle. And obviously Circle pays a fee to BlackRock to do that. Now, if you can avoid that fee by managing your own reserves, right, that gives you a competitive advantage. So when you added it all up, your and Reed's point was like, well, look, who has distribution channels? Who has cross-sell? Who has access to broker dealers, right, that can manage the reserves? It is large banks.
Large banks. We did, and then we also branched off a little bit into the reserves themselves. And we talked about that. And if you look at the BIS report that came out a few weeks ago, or some of the comments that have come out from Treasury Department, they are both forecasting huge growth of stablecoins. I mean, between $3 and $5 trillion. Where are you going to put that? As we said, trees can't grow to the sky, and there are only so many assets that can back those. One of the things that we talked about, we didn't go into a lot of detail, but we did go into a fair amount, was, this demand for reserve assets could drive down rates quite significantly at the short end of the curve. So we could actually see a normalized yield curve brought about by stablecoins of all things. Actually talked about this yesterday in that the Q4 economic outlook that I did here in Raleigh. But and people were like, "Wow, really? Is it?" And it's like, yes, there aren't that many assets to buy to back these. And remember, they have to be backed at 100%. And so, if you want those high yielding assets, you're going to buy things like treasuries, which have real yield on them. All of a sudden, this becomes a rather vicious cycle. So as these yields compress, which they will. As these yields compress, places like Circle are going to have a much more difficult time making money. And the big banks don't quite have the same kind of pressures. They already have the volume. They already have the scale that allows them to do this. And so, it's like almost every aspect we looked at kept coming back to the winners are going to be the big banks. I mean, they can't not be almost.
Yeah. Yeah, and this is something that I've struggled with a lot, and I bring it up every time we cover it on the show. We say, oh, so-and-so has launched a new stablecoin initiative, so-and-so. And in my mind, the market just cannot support this number of stablecoins. And there's an element of FOMO going on. Like we said before, it's gotten to the point where if you are a financial institution and you're not issuing a stablecoin, people are looking at you like, what's wrong? What's going on there? So there's this urge to kind of do it without a lot of thought put into it. And what does the future look like? Again, there's really from a user standpoint, there's really no differentiating factor, right?
No.
Unless, of course, and this was not in your paper, but if when we talked about the Walmart stablecoin, the Amazon stablecoin, the potential, right? Then you can offer to discounts on the platform. I mean, that's a different situation when you have, an already, a very large and vibrant business. But if you're not like a retail facing business in any other way, like why would someone use your stable coin as opposed to another stable coin? And it's because, look, your stable coin is going to allow them to park it somewhere else and get interest, get yield, rewards, whatever the term you want to use
rewards. I mean, rewards are just, the inverse of yield. It's the same thing, folks. It's just yield with another name. And so, exactly. but you will
semantics.
I mean, you will get that. It's funny when I mentioned this yesterday to this room of people. Everybody was like, because somebody asked the question, you brought up the idea of a Walmart or Amazon stablecoin. Why would they ever do that? And when I mentioned it, everybody was like, oh yeah. I mean, it's because everybody uses reward cards, right? Cap One or whatever. reward cards. And so the concept is well known, and everybody could see immediately, oh, this keeps you on their network forever. It's like, yeah, well, at least it helps to keep you on their network. So, I mean, it's a interesting, I think it's a paper. We try to write it in a very readable, not a journal format, so that it would make it a little bit more readable for people. But I think it's an idea that had to, kind of get put together and in one simple place. And as you said, it's a short paper. We were very, very conscious of that. We didn't want one of these 30-page, 40-page things with tons of math in them. I mean, those are insane. Nobody reads that. Other academics, but that's it. And so we wanted something a little bit more approachable. And I think we achieved that. There's definitely a couple of more papers that are going to come out of this where we can go into some details, but we wanted to get the overall idea out there just because I think it finally had to be done. And you and I have talked about aspects of this.
We have.
Once we started doing the research, it's the assets that back these. I mean, people just don't realize how few there are. I mean, and remember, money market funds aren't going anyplace. They're gonna be out there. In fact, I think money market funds, they're with us forever. And when people ask about stablecoins, well, why would we need stablecoins? It's like, why do we need money market funds? It's the same reason. It's a place to park your cash and get some yield. In this case, I think we will probably see more banks looking to do the tokenized deposits like JP Morgan has. And that's definitely something that I want to explore a little bit more. But I definitely see banks using that as a vehicle, possibly instead of CDs going forward.
So what happens then if Congress, as the banking industry is currently lobbying, decides to close, what I think is clearly a loophole, and they're certainly calling a loophole, that would stop these third parties like Coinbase from offering rewards, yield, interest, whatever phrase you want to use, on stable coins? Does that change your ultimate conclusion at all?
No, it doesn't change the ultimate conclusion. In fact, it will probably actually hasten it, because if there's no reason to buy a stable coin from a standalone type company, if you can't offer those kinds of incentives, then why would you? I think it could hasten it. The other thing is the banks.
It's all about distribution, though. So the key point is all about distribution.
The banks have the advantage of being able to do tokenized deposits instead of stablecoins too, which a tokenized deposit to a retail consumer looks exactly the same, except that pays yield.
Yeah, that's true. It does.
Yeah.
And it's FDIC insured.
And it's insured.
Yeah. So I think tokenized deposit, stablecoin. Give me the tokenized deposit.
Yeah.
All right, Jimmie. Well, look.
in any case, the banks went out.
Well, anyways, it's funny how that always works, right? Funny how that always works. Somehow, some way. Yep. Okay. Well, be curious to see, obviously, if your predictions hold true. Although it made perfect sense to me. And look, in the paper was spurred in part by just the wild success of Circle's IPO, right?
Absolutely.
I mean,
Absolutely.
it wasn't the first IPO of 2025, but it wasn't far behind the first, and I mean, this thing popped in a way that I don't think many people were expecting. I forget what it was initially priced at on the roadshow. I want to say around like 30s.
Yeah, it seems like that.
Something like that. And man, this thing just like shot up like a rocket ship. At one point it was trading north of $260.
Right.
It's obviously come back down quite a bit since then, but it's still significantly higher than its first day. It's $131 as of yesterday's close. And so look, the markets are watching this, crypto firms are watching this and saying, maybe we should IPO. Like, now is the time.
Oh yeah,
right. This is a hot market, and so we've seen one other crypto firm at least have an IPO, and that is the exchange Bullish.
Mm-hmm.
Now, I don't think we've talked about Bullish.
I think maybe just in passing.
Yeah, and
we have not spent a lot of time on Bullish.
And frankly, I don't know. And you talk to more people in crypto on a regular basis than I do. But Bullish is not really a name that you hear brought up all that often. No. It's not a platform that I think many retail users are using, but it's not designed for that either.
No, it's not.
Bullish is really designed for, institutional crypto traders. So it's an exchange, right?
Yeah.
Just to be clear, Bullish is an exchange. It has a lot of high profile backers, including Peter Thiel. He's an investor in Bullish. And they did an IPO earlier this month. And an interesting part of their IPO, Jimmie, is that the proceeds, and they didn't raise a lot of money. They only raised a little north of $1 billion in the IPO. But those proceeds were paid to them in stablecoins.
Right.
Right. And so
and a variety of stablecoins, a large variety of stablecoins, which I thought was really interesting. Yeah.
So the vast majority of the stablecoins were minted for Bullish on the Solana network.
Yep.
Hat tip to Jefferies, right? So Jefferies was the billing and delivery agent for the IPO. They also coordinated the stablecoin minting, conversion, and delivery process. So I think that's probably the first time I've heard Jefferies' name thrown about in a crypto news story.
Yeah, I mean, but it's funny. It is the first time, but it's Jefferies, and people don't realize this, but Jefferies and Cantor have kind of there's a lot of commonalities between Jefferies and Cantor. And so remember, they were the first. People don't realize this. These were among the first off market or third market firms when they were just brokerage firms. And Cantor and Jefferies, and they were both founded in Los Angeles. So they're both West Coast firms, although people don't think of them that way anymore. Jefferies was right downtown LA, and Cantor Fitzgerald was in Beverly Hills. And I worked for both of them.
Okay.
So I know them reasonably well. And so
the bodies are buried.
Yeah, a little bit. But there was a guy by the name of Boyd Jeffries, who's the firm is named for. And it was so they do have some commonalities there. And as you know, and we've talked about it before, Cantor Fitzgerald is very squarely in this space, custodying assets and things like that for on the digital side.
Yeah.
I mean, the Howard Lutnick, who ran Cantor Fitzgerald, is now in the administration, and
Commerce Secretary
is providing, he provides some input there. But Cantor has been very much in this space, so I'm not surprised at all that Jefferies has done this. And Jefferies also is a big firm for those who kind of follow institutional things. They do a lot in the institutional space. So I mean, custodying assets and things like that for institutions. They have a fairly large prime brokerage outfit. So
everyone's getting into crypto. You have to get into crypto now.
You have to these days.
I mean, all the IBs have to get into crypto. So the proceeds of the Bullish IPO, most of them were settled in USDC. They are being custodied exclusively by Coinbase, but they also got stable coins in the form of the SocGen Forge, so USD convertible, the Paxos Global Dollar, PayPal stablecoin, PayUSD, Ripple stablecoin, World Liberty Financial.
World Liberty Financial. Who would have thought?
USD1. Oh, you got to curry favor with the king. And so look, the David Bonanno, the Bullish CFO, said he says stablecoins are one of the most transformative and widespread use cases for digital assets. I think we all agree on that. Internally, we leverage them for rapid and secure global fund transfers, especially on the Solana network here. So thoughts, Jimmie, is this something that we're going to see more of, crypto firms IPOing and getting IPO proceeds in stablecoins?
I think so. I think the idea of using stablecoins is starting to proliferate throughout a lot of different parts of the economy, and we are seeing them being referred to and being used. I mean, it seems like a natural, especially those that are dollar denominated. It seems like a natural, especially for something like this. It's I'm not going to say it's kind of a gimmick, but it's I mean, these are the people that you're serving, so why not? I think if you didn't do this, it would kind of stand out, right? If you said, "Oh yeah, I'm a crypto company, but I'm not going to take any crypto."
I mean, exactly. It's like how much
you almost have to.
How many more examples do we need that, because I bring this up a lot, which is, it seems like a lot of the product innovation in crypto is around like getting economic exposure to crypto without having to deal with crypto, right? Like, perpetual futures and ETFs and the treasury companies, right? And so, it would be like a bit, rich, I guess, for a crypto company to like do the most like mainstream fundraise thing ever, which is IPO.
Right.
Hire an investment, hire an investment bank, a white shoe investment bank, hire Sullivan and Cromwell, and then, raise dollars on public markets. Right. So, you have to put a crypto veneer on some of this stuff,
Oh, I think so.
just for credibility's sake. Now, look, I'm not, and maybe Bullish is really truly is bullish on stable coins, but you have to do something other than just what all other IPOs before you look
yeah,
like. So,
you have to.
For credibility's sake. All right, so another IPO in the works, Jimmie, is, and maybe this should be like our next S1 deep dive here. Gemini, right? The Winklevoss twins. The Gemini cryptocurrency exchange earlier this month submitted their S1 to the SEC. Still no details on the timeline here or the number of shares to be offered or the price range. So that is to come here. But they did list Goldman, Citigroup, Morgan Stanley, and Cantor. Will be lead book runners. So you got Goldman Sachs there, top of the tombstone. Doesn't get any more traditional than that there. Look, like I said, everyone's just looking at these crypto IPOs saying, we got to get in. We got to strike while the iron's hot. Gemini, I should have looked this up before we recorded today. I don't know where they're at in their rankings, but I mean, I know they're behind, obviously behind Coinbase, behind Kraken. So they are not a super big crypto exchange in the US. They made some headlines of late for, well, the Winklevoss twins have gone sort of full MAGA, so that's getting a lot of headlines. But they kind of pioneered the crypto credit card. So if you follow what they're doing on social media, they're really pushing their Bitcoin rewards credit card. So I don't know, what this business looks like, but it'd be, maybe worth exploring.
Yeah, I mean, I think it's interesting that they're doing this. I'm not surprised. I mean, it seems like Gemini has been, kind of it's been the redheaded stepchild of the game for a long time. I mean, no matter how much they've tried, they've never really they don't seem like they've ever really hit the big time. There's certainly,
That's a good point.
It seems like the only time they really hit the big time is when they file some kind of lawsuit. As far as the actual service goes, I just haven't seen it. Maybe it's just me. I haven't been made aware of it, but I don't see them making the same kind of splash as some of the other exchanges. And I know that they do. They're trying to do a lot of different things, but they just don't seem to have had the traction as some of the other places. So I think if in this environment, if they can go public and capitalize on it, good for them. They've been around and doing this for quite a while.
Yeah, I'm with you, and I don't want to say too much without having really done a thorough analysis of the business. But I second your remarks there. Look, at this point, you have to be more than just a crypto exchange. If that's all you're doing, then I just don't see you being around long term. I mean, just look at all the things Coinbase is doing on the institutional side with Base, right? All custody, right? They're the custodian for most of the ETFs, right? We just announced Bullish, right, that is using Coinbase custody, and they're trying to get into tokenized equities, right? So you have to be back to the Paul Atkins speech, the crypto sprint speech from a few weeks ago, right? He kind of brought up this notion of like the super app. You have to do everything, right? You have to offer as many products and services as you can in order to stay relevant and grow. I'm just not seeing a lot of that out of Coinbase or out of Gemini. Like I said, they do have the credit card program, but everyone issues credit cards now. So you have to do more than that. And I just don't know what their plan is, but presumably they have one at least laid out in the S1. It's funny though, the historical arc of Gemini, because people forget very early on when they launched, they really leaned into regulation, and there was actually ads. So if you were in New York or in DC taking the subway or the bus, you would see ads that said Gemini, the first regulated cryptocurrency exchange. And the reason they claim that is because they're one of the first entities to get the New York State BIT license, right? They're based in New York. So they really kind of thought regulation would be a differentiating factor and allow them to grow. And it really did not pan out that way.
Yeah.
And now they've kind of they've reversed course on that sort of embrace of regulation, and now they're actually trying to lobby and water down, from my standpoint, the Clarity Act. So I guess that didn't pan out for them, and now they decided to be sort of anti-regulation from my standpoint. So, but I'll take a look, and I'll let you know if there's anything worth talking about.
You know what it might be worthwhile doing? Why don't we take a look at their S1 and unpack their S1 kind of like we did Circles? What do you think?
Okay. That's a plan.
Like we talked about before when we unpacked Circles S1, people gloss over these things. They don't really look at them, but there's like a ton of information. There's great stories in there. These things they're long. They're very, very voluminous.
Yeah.
But a lot of it is, regulatory things that you have to put in there. But the first half of them tell a good story usually, and you get a lot of insight into how they make money, what they make money doing, what they're looking at in the future, and so it tells. I think it'll give us a really good idea. So I would say let's look at unpacking that in the next couple of weeks.
All right, it's a deal. We're gonna do it. All right, Jimmie, moving on. We'll stick with the world of regulation here. The acting CFTC chair, Caroline Pham, who really seems to enjoy the spotlight, good or bad, frankly.
Yeah.
She is doing a lot of things. Let's just put it that way. But going back a few weeks ago to the president's working group report on digital assets, which we covered, right? And there's a lot of information in there, a number of recommendations, and really, I think the main recommendation, from my vantage point, was sort of a missive to regulators to do what they can now, basically using their own authority now, right?
Yeah.
Essentially, don't wait for Congress. Do what you can now to facilitate, crypto trading, for the masses, right?
Yeah.
And so regulators have responded shortly after that, right? Chair Atkins gave the famous crypto sprint speech.
Yes.
And if crypto blows up, it'll be an infamous speech. But acting chairman Pham was not to be outdone. So she launched a crypto sprint initiative, or what did she call it? She called it something. I forget what she calls it. But she called crypto sprint, I think. Anyway, so as part of the CFTC's new crypto sprint initiative, the Commodity Futures Trading Commission is now taking public comment on. Actually, no, it's closed. So you had to get it in by August 18th. So sorry if you're late here. Anyway, she is trying to see if there is a way for CFTC registered designated contract markets, right? And these are just futures exchanges. That's the technical term for a futures exchange in the U.S. is a designated contract market. If there's a way to allow them to list spot crypto, right? Now, when I read this, I was like, okay, it's pretty obvious that the Commodity Exchange Act does not allow DCMs to list regulated spot crypto. And it turns out a lot of people agree with me, actually, Jimmie, because the Futures Industry Association, which is sort of the main trade organization for the futures industry, which historically has had a very cozy relationship with the CFTC, they submitted a letter in response and said, look, the CEA does not allow this. So I don't know what the ultimate outcome is here. But you look at Coinbase, Jimmie, they have a DCM license, right? Yeah. They have Coinbase derivatives, right? So they are already registered with the CFTC. If this proceeds, if the CFTC proceeds down this path, you're really kind of denying or voiding the need for any legislation, frankly, because the whole point is that there's this gap in crypto spot market regulation, right? The CFTC does not regulate commodity spot markets.
Right, doesn't regulate spot markets.
They only regulate commodity derivatives markets. So now she seems to be implying that, well, actually, no. If you're registered with the CFTC, you can actually list commodity spot markets, and contracts. And so a lot of people are just kind of scratching their heads about what's going on here.
Yeah, well, I mean, it's always that's always been though a strange thing. The idea of the spot markets. So derivatives are one place, the underlying is someplace else, and they're regulated in two kind of different ways, even though one's a
Yeah.
derivative of another one. I mean, it's always been very screwy, and it's the we've talked about it a million times before, the very fractionalized regulatory environment that we have in the United States. But I think in this case, we're seeing it, it's coming to fruition very quickly. Usually these things take forever, but these are
Yeah.
people that are on the move. They're doing things. They're and so I think it's good that they're kind of raising this up. The people, I think if you're not really involved in trading, if you don't do a lot of activity in markets and things like that, you don't realize how big the derivatives markets are. Derivatives markets are huge.
Yeah.
We were talking about this in my quantitative investments class yesterday. Why do people use them? They use them for a lot of reasons. One is leverage. Those. Yeah, I mean, for futures, you typically 20-to-1 leverage. For options, it's a little bit different. It's not as set, but it's a great amount of leverage that you can create with these. But there are also reasons to do it, for protection and hedging and all kinds. There's a million different reasons people use them.
Yeah.
But they've become so prolific. At one time it was, options expired once every 3 months at the end of the quarter, and they were very staid. Today, options, their options probably trade or listed. There are probably, I would just guess here, I don't know. I'll bet 50 to 100 listed options for every listed stock in the U.S.
Yeah.
I mean, that's how prolific they are. That's how much these are used. And I don't see any different in this space. In fact, it may even be more so because it does seem like options are really, really popular among younger people, which tend to, I think, glean onto crypto a little bit more. I look at Robinhood and places like that, and I mean their options platform is
massive.
really, really well used. Yeah. And so you have to think. I mean, and futures are a little bit different, but not that different, and they're very, very accessible. So I mean, I like seeing this brought to the forefront.
Well, yeah, I mean, you got to be bringing it to the forefront within the bounds of the law. Like, I don't know. I mean, she just seems to be ignoring, frankly, the law. Now, I read the Futures Industry Association letter, and and it was a very good letter, but they made the point that, look, under the Commodity Exchange Act, which is the authorizing legislation that creates the CFTC and governs their operations and the markets they oversee, that a designated contract market can list spot commodities. They just wouldn't be regulated under the CEA. So if I'm going to be charitable, maybe that's what she has in mind, but I don't think so. I mean, I think the point is that you would bring spot crypto trading within a regulatory perimeter, which is the whole point of legislation. So I just don't, again, like the logic here doesn't make a lot of sense, and it seems to undermine the case for clarity or for any type of market structure legislation. But you're right, Jimmie. Like, look, I think the logic behind going back in time here, like not regulating commodity spot markets is like, well, those are big markets that are used for everyday commerce, and it's just like not feasible or desirable to have the government, regulating that, right?
Right.
I mean, companies need to buy gasoline, and companies need to buy oil like all the time, right? I mean, livestock producers, need to buy feed, right? Need to buy soy and corn and all that stuff. And why does
people need to sell their crops forward to guarantee prices?
Well, but not the forward stuff, but just the spot, right? Like just think of like right. So like I'm trying to get at the logic, right? Just like if you were to explain someone why are derivatives why are commodity derivatives but not spot regulated?
Yeah.
Right? Commodity derivatives are financial transactions.
Right.
Right. Whereas spot are generally what I would consider they're economic transactions, right?
Yeah.
They're just transactions that are necessary for the normal course of commerce and business, right? Whereas they're not necessarily financial in nature.
No, but they come to benchmark.
And that's why crypto's different, right? But crypto's different because people buy, as we all know, people were buying and selling crypto. Obviously not for an economic. It's not as if you need crypto to to like function in physical life, right? It's an investment. It's an investment.
Well, no, but some people do. If your business involves on-chain transactions and you have to have crypto to finance those on-chain transactions, I mean, it's a small population. Yeah, I'll give you that. But
Okay,
there are
there's
people,
exceptions.
you
I'll
know,
grant you
but
that.
so there are those kinds of things where people do have to have it if they want to
Yeah,
continue their business.
for
Um,
sure.
and then there are a lot of people that are now involved by the industry, right? I mean, the Coinbases of the world and the Circles of the world and Binances of the world. I mean, they employ a lot of people. Um,
Yeah.
yeah, so we
Well,
are
that's so
seeing.
yeah. Yeah, I'm with you. I'm with you. It's just, yeah, I don't know what's going on here. And the final note on the CFTC here is, they also put out
I was
an
going to say they put out a
advisory.
couple of things.
Yeah, they put out a couple things. So on foreign boards of trade here. So look, and this is something you see I think in a lot of other contexts too, which is to what extent should foreign-based financial institutions be allowed to operate in the U.S. and serve U.S. customers?
Right,
And there's a principle known as sort of reciprocity, where in essence, if the foreign entity is regulated under a similar set of rules and standards as U.S. based entities, right? They are allowed to serve U.S. customers, right?
yeah.
And this is certainly relevant in the crypto context, Jimmie, because crypto, Binance
Oh,
is by
yeah,
far the biggest crypto exchange.
yeah.
They are not allowed to operate in the U.S. or serve U.S. customers. They had to close Binance U.S. as part of their settlement, their criminal settlement a few years ago. But just crypto trading is like, it's just a lot bigger overseas, a lot
Sure.
bigger. And so that means that U.S. persons don't really have access to those platforms. And so yesterday, the CFTC put out a clarification around what are known as foreign boards of trade.
Hmm.
These are essentially, overseas derivatives exchanges, right?
Right,
Platforms. And it sort of reiterated existing guidance that says, look, they can serve certain U.S. customers, right, provided that they are registered and regulated, according to a similar rule book as they would be in the U.S.
yep,
And I think people are parsing through the implications of this. One of which I've seen sort of people comment online is like, well, look, it seems to be that the intent here is to open up access to these overseas crypto platforms to U.S. users,
right.
right? That seems to be the implication. Now, my reading of the guidance is that you have to be a futures commission merchant in essence in order to access these overseas platforms. So it's not necessarily the case that you and I, as retail
Yeah,
users,
we can't do it. Yeah.
we can't do that. But if we trade through
An
an
FCM.
FCM,
Yeah.
then the FCM could do that.
If nothing else, people who listen to the show should figure out how complex the financial system is just by,
Dude,
us always talking about these third
acronyms, I
parties and
know.
these other plumbing kind of features that the financial system has.
We do our best to spice it up,
amazing.
man. It's hard. I know this is technical stuff, and it's like people are probably listening, like, God, what the hell are they talking
What are
about?
they
This is
talking
boring as
about?
hell. But it's important stuff, man. It's market access, and it's market integrity issues. And it's like, hey, there's a lot more products. Like we talked about perps before, but you
Yeah.
go to Binance, if you trade on Binance overseas, you just got a lot more access to products over there.
Oh, tons more. But you know what? The same goes for exchanges and regular stock exchanges in other countries. You tend to have stock and derivatives exchanges. You tend to have a lot more product than you have here in the States. Knockouts and perpetuals and things like that. I mean, those started with stocks. They didn't start with crypto.
Interesting. Yeah.
Those kinds of things have been around for a long time, and it's
Good point.
interesting. I mean, I'm trying to think. Gosh, it must have been during the financial crisis. I was unwinding some stuff, and in Asia,
a lot of people were unwinding some stuff.
Yeah, I was unwinding some stuff for some banks, and and I was running into a lot of these, a lot of these really esoteric derivatives, and that was one of the reasons I was there because I understood what they were, and we were looking at them, and it was unbelievable how prolific they were. Folks, this is 15 years ago. Yeah.
Yeah, things don't get less complex with time.
No,
right?
No, they do not. They do not. While we have by far the most developed capital markets in the world. I mean, no, there's nobody even close to the U.S. The types of different products that are available though are limited here compared to some other places.
Yeah. Well, that's a good note to add on. So we'll keep tabs on all this stuff that the CFTC is doing. I mean, look, like I said, it's all in response to the president's working group report, right?
Yep.
The president very clearly said he wants to make the U.S. the crypto capital of the world, and these agencies are clearly not waiting on Congress. And there's a lot of stuff in the hopper at the SEC, Jimmie, that we're going to be talking about in the weeks and months ahead. And so I just don't know, like, what I think. The risk from the crypto industry standpoint is that this undermines momentum to get market structure legislation done.
Yeah.
Because in essence, if the agencies are just unilaterally giving industry what they want, well, why need legislation? And the only, the response would be, well, look, presidential administrations come and go. We want to kind of lock in our gains legislatively to stop Gary Gensler 2.0 from coming back. But Jimmie, as you know, with finance and financial markets, it's really hard to put the toothpaste back in the tube.
Kind of impossible.
Right. And just think of, like, as an example, think of, Bitcoin ETFs. Remember how controversial that was?
Okay. Oh, was it controversial at one point?
Well, yeah, exactly. Look, Commissioner Crenshaw at the SEC, voted against allowing them, and the crypto industry, used that against her when President Biden renominated her and scuttled that renomination. But look, can you imagine? I mean, even if and look, I still think that was a mistake, right? But can you imagine the SEC, a future SEC, trying to wind that back?
Oh, couldn't do it. Could never do it. I mean, it would be almost impossible. But I mean,
I don't even know how you would go about doing it. Frankly,
I don't know how you would go about doing it. And I mean, the now with a dozen companies that are offering these, how are you going to compensate them? What are you going to do?
Exactly.
I'm just
That's
the
point. Is that there's too much? It'd be too harmful, right? I mean, you have all these market participants that have then entered, this market, this product, and you would be harming them economically in a meaningful way, which is counter to the SEC mission of protecting investors. So once you let something into the market, or once you let a certain behavior take hold, it is really, really hard.
Oh, absolutely.
To do that,
pretty much impossible.
And I think certainly Chair Atkins knows that, which is one of the reasons why he's pushing so aggressively to to get tokenization going.
Yeah.
To allow SEC registered entities to list non-securities, right? Non-crypto asset securities, or non-security crypto.
Non-securities.
Anyway, a lot of moving parts here, Jimmie. That's why we do this on a weekly basis. A lot of fun. Hey, enjoy this lovely weekend. Rest after I know was a hectic first week of the semester, man. So
I will try to do that, and you do the same. Have a good weekend. All right.
Talk soon.
Soon.